Hello everyone, welcome back to the channel. Tan's here, and firstly I just want to say I know it's been a long time. It was a mixture of life and just thinking of content that was getting in the way of me keeping up with the videos. I think the content that's already here, it's enough, but it's been on the back of my mind to create something for you guys that's accessible and most importantly free for you guys. So what I'm going to touch on is the blueprint. Now, I've already discussed the blueprint already, but that was more from a higher time frame perspective. But in this video, I'm going to show you a lower time frame model, including the seconds time frame, which you can utilize on a daily basis. Now, this is more for those who want to be a bit more aggressive and have a bit more risk in the market. Now, before I get into this video and before you get into this video, in the SMC space, what I've noticed is that there's a lot of comparison between the edges. And at the end of the day, the goal is to extract what you can from the market. It's not about whose strategy is best. It's not about who can get the best and highest RR. It's mainly the case of withdrawing consistently by using a simple repeatable system. Obviously what I'll show you is a simple repeatable system, but the goal is to be able to extract money from the market. It's not just to flex on Instagram and show a high risk to reward which will catch 1 out of 10. This model will give you a simple repeatable system to catch a minimum of 1 to 3 or 1 to 5 depending on your choice from your testing. Now, already talking about the blueprint, so by now if you've kept up to date with the videos already posted, you would know the background behind the blueprint. Now, this is a very basic drawing of it. Essentially what we're looking for is liquidity to be taken, and then we're looking for a break of structure. Then we're waiting for mitigation of the previous range, which we have here, and then we're waiting for that next break of structure, and we're looking to enter here. Now, the variable that we have when we talk about a seconds time frame is here. We will look for essentially the same thing and then enter off there. That is going to be the only variable that you have, which can be considered as discretion, but it's completely up to you. How you can keep this as a simple repeatable system is by having a set rule of you will enter at certain points. You won't wait for the mitigate. I'll go on in further detail, but you can either have two variables where you can enter at the first entry, or you could wait for that mitigation and enter there as a more of a confirmation entry within the confirmation. Alternatively, you can enter straight off here, off that 1 minute that I'll show you. It's completely up to you. And obviously, the deeper you go, the higher the win rate you get. But you have to think about also the other way is the deeper you go, the less likely you're actually to enter a trade. So the frequency of the trades decrease this way, but the win rate increases this way. So you to think about it in that sense. So what I'll do, I'll go over, I'll see if there's anything today. Now, I am so sorry to interrupt the video that you are just about to watch, and I hope that you're enjoying it so far. Now, I just want to take a short moment of your time to explain the daily pip cycle, which is our reinvented edge that we've been trading back from 2016. It's been a theory that's been around for decades, and all we've done is improve the entry system to the point where we have a simple repeatable system which has allowed and given our community members consistency and profitability and having some clarity behind the market. The only reason we've done this is because at the end of 2022, myself and James, we sat down and thought, what can we do to improve consistency within our Discord? And we worked out and eliminated everything that was holding our members back. Create a system where it's one time frame, one pair, same rules, same entry, same stop loss, same target, same session, and it, again following the exact same rule. And when I say it is impossible, and I'm saying it with full heart, it's impossible to get any different trade from myself. Every single day you'll see trade being posted by me, and you will have the exact same trade exact same result taking. Now we've already hit 2000% mark in compound gain, and I'll keep updating you. If you follow my Instagram, you'll keep seeing the results. What I'm showing you here now is student results of constant replication after replication after replication. These aren't just simple replications, these are replications of every single trade that I have taken, and the reason why they're able to do that is because they are following a simple mechanical approach. Now obviously, if you want to improve your trading, which you clearly are if you're watching this video to begin with, what I suggest that you do, click in the link below. It will be labeled as the daily pip side. Click on that, it will take you to a page. Join our Discord, learn this edge for a small monthly fee or a lifetime fee, whichever suits your budget. And I promise you, you'll have an edge where it'll give you so much clarity. You'll have a simple system that you can follow with very little stress, no emotion, no guesswork. It's just simple. As soon as the entry rules present, you execute. Anyway, I won't take any more of your time. Hopefully I'll see you in the Discord, and I'll let you get back to your video. So this is the price action from today, which is the 25th of September. And again, this is GU. Now on this chart, obviously you can see there's a box between 7 and 9. Now already on the blueprint videos that I've given you in the past, I've explained about liquidity, I've explained about mitigation, and how you can increase your confluences. Now I'm going to talk about timing. Timing is quite important, more important for this edge, because this is an M1 model. Now the reason for that is because at 7 o'clock we have Frankfurt open, at 8 o'clock we have London open. Bear in mind, this is 7 to 9 UK time at present, just for those who are adjusting their time zones. The reason for this is because at these times you tend to have a sessional move, and what I mean by that is some sort of impulsive move. Now when you have this is something that you need to, as soon as you acknowledge that, you need to understand that this is what you should be capitalizing on to have a quicker rate of return. It's not about rushing the trade or trying to get, it's not about rushing the trade, but you're trying to get as much as possible from the shortest amount of time. The reason being because the longer you're in a trade, the more stressful it can be for you. How many times are you in a swing and then you keep looking at your MT4, constantly logging in and off your phone, and it's causing you stress, and you see it lingering around your stop loss. The next thing you know is in profit, and back to your stop loss and back in profit. It's annoying. So the reason for this is that we're trying to capture a short move, which is why I said at the start is that we're generally looking for a 1 to 3 or a 1 to 5. Now what I'll do is also explain why you can see fractals on the chart. Now when I first learned how to trade, I didn't understand market structure. What people call the high and low was very different between myself and my friends when I was learning together, and it didn't make sense. There was too much discrepancy. When you're having a mechanical approach, you need to have a set system of how you're going to mark your ranges and how you're going to understand your ranges. Everything about your approach needs to be mechanical to an extent. Now this edge will have a little bit of discretion, and I'll explain when I talk about the seconds time frame. It's only 2 variables, and it will come down to the point of you choosing 1 or 2. That's all it is. The rest of it is a simple repeatable approach. Now just to highlight what we're looking for. Now I don't want to keep drawing so you're aware, but we're looking for a breaker structure, mitigation of the range, and then we're looking for another break and a mitigation for this range here. Okay, simple as that. Now before, again, because I can already tell just by looking at this chart, I've not actually looked at this chart properly, but I can see there is an entry. You don't have to be too perfect, and the reason why I'm mentioning this is because over the years that we've been teaching is we've just passed our 5th birthday at Vertex, is everyone is trying to be a bit too perfect and trying to capture these moves. So fractals represent like reversal points, and everyone's trying to capture an entry there, an entry there, an entry there, an entry, okay, not there, forget that one, an entry there, an entry here. Okay, and now when you capture them, they look beautiful, they look great on Instagram, you do a post and whatever. However, how often are you actually getting these moves? I will show you how to get somewhat of a what you guys will call a sniper entry, but you need to understand that you don't have to be too perfect as long as you are entering with a as long as you are entering with a methodical approach with reasoning and stats to back it. Now, again, I want to highlight, you shouldn't be comparing edges, you shouldn't be comparing strategies or you know, whatever, however you want to compare now in this FX space, it's very messy, which is why I don't get too involved. The reason why I'm saying this is because expectations are built so high now that a simple edge is seen as nothing and it's seen as invaluable. However, whilst a lot of you are trying to capture these massive 1 to 20s, 1 to 10s, if you can't even capture a 1 to 3 or 1 to 5, then you shouldn't really be looking at, you know, looking for these bigger trades and these more refined trades. Start simple, build up your capital, and then you have that's based on my opinion, by the way. It's not like a golden approach, but that is my approach. I started off with 1 to 1s and 1 to 2s, and then I improved that to a 1 to 4, and then suddenly I from 1 to 4 to 1 to 10, and that transition was easy purely because I developed more experience in the market and had a bit more understanding, and I had capital to back me. Whereas if I made a mistake, I was fine. I wasn't too impacted by it. However, if you're learning and you're impacted by the losses, maybe going for these massive moves is not ideal. So although we've drawn these boxes between 7 and 9, what we can do is also use structure from before the session just to understand what has happened. So if you're looking at, and all you need to look at is literally where the fractals are being printed. That's all you're looking for. It's as simple as that. So we're looking for the last fractal high or low to be taken. And now in this case, obviously we get a low and a high get taken, but what happens after is what will confirm which way is the liquidity graph. So obviously high gets taken here, and then we have a break of the structural low, which means this is a successful liquidity grab, which is indicating the price wants to go bearish. Now, before I keep drawing, so now we have this is what we're looking for, and that's indicated the move of the session. We are looking for mitigation of this range. Okay, once that mitigation happens, which happens right here, this is what confirms that price is going to continue downwards as soon as it breaks structure again, and the range to break is from this low to this high, which it gets broken here. Now this is the part where I'm talking about when you shouldn't be too perfect. I saw it on first glance and I thought I should mention it now, because this will probably seem massive for you guys. Is in order to understand what's caused the whole sell move, you need to understand it's the buyers causing these sales and it's the buyers causing these sales to break the structure, right? So we're only looking for mitigation of from here to here, which is obviously like a massive move for a buy to sell. Now if you want to enter just straight off the M1, you can simply do so by entering off the 50% or off the open if you want, but I think that risk to reward might be too low. And then with GU, you obviously want to, because it fluctuates quite a lot, you want to give it like a pip. So I'll give it to 8 pips. Now at this point, price is already, it hasn't moved too much, but because it's 8 pip stop, ideally you want to look for price will move between 20 and 30 pips during the session. You want to look for, at this point, if you're having 8 pips, that's quite a lot. You want to ideally look for a 1 to 3 rather than a 1 to 5, and that's what will help you decide. But the best thing to help you decide what risk reward you're going to aim for is by doing the stats and doing the back testing to understand what's best for you. Now in this case, obviously here is here. Okay, press play. Now obviously this hits TP. Now what I want to say is, let's see if it does hit one. I don't remember it. Oh, maybe not. This is what I was talking about in terms of being in swing trades. This is when it gets annoying. You're looking at this and then it's all the way back. Okay, and the reason why I wanted to say that is because say if it did hit 1 to 5, and because you've seen that a couple times happen, it doesn't mean that you should risk the reward to a 1 to 5. Keep it consistent. Stick to a 1 to 3 if your stop loss is. Now to give you an insight on how you can create these rules is understand what the average stop loss is and what the average risk reward you're getting depending on the stop loss. Then you can understand whether you can do a 1 to 5 or 1 to 3. Ideally, I would say if you're getting 3 pips and below, you want to go for a 1 to 5. If you're getting over 3 pips, you're pushing for a 1 to 3, just to be safe. Now let's have some fun and let me show you the seconds time frame and how you can use the seconds time frame to be a bit more, I would say, perfect. So all we're going to use now, the 15 seconds is probably the best entry time frame to use for this, although you can have a play around should you wish. 15 seconds is what I used myself. Now all we're looking for is the exact same thing. However, the difference now, and this is the variable I'm going to speak about, is, so essentially we were looking for this, right? Waiting for a liquidity grab, breaker structure, and we're looking for that mitigation, and then we're looking to end, which is here. Now, at this point, because you already have the M1, you've got that mitigation already, you are entering at the mitigation of that mitigation. So that's already a really high probability trade. You are in this position here, right? You don't have to be too perfect. You can enter straight off the first mitigation should you wish of that first range. However, if you want to be a bit more cautious, you can enter again at the hopefully there's an example here that I can show you. If there's not, I'll try to find one for you. Now, just remember, is the deeper you go, the less frequent you will find trades, so the less likely to be to enter. However, the win rate would increase, but then you need to understand what win rate is ideal for your psychology and what you're happy to do going forward. Okay, so so this is where price hit the 50%. It doesn't have to hit 50%. You can look as soon as price enters that range. You can go to your 15-second. Okay, so you have the 15-second time frame, and then all we're looking for is for a fractal high sweep. Now we know we're looking for a high sweep to go short, right? Because that's what the high time frame is telling you. Okay, so what we're having, so we have a fractal high sweep here. We have a breaker structure. Okay, so we have a breaker structure here. Okay, so we can enter off this range itself. Okay, now you can do two things. You can enter off the start of the range, which is there, and that will give you pip stop loss. And you can do, you want to go for a one, and again, this is where you don't stray from your rules. Stick to your rules. You can adjust that if you wish. I just set that as a whim. Or alternatively is you can go for the 50% of that first mitigation, and then that will give you a 2.4 pip, and that point is you can aim for a 1 to 5. And if you think about it this way, this is what I'm talking about. ROI is the ROR, the rate of return, is that this trade hit TP here in 12 minutes. So in 12 minutes you've done 5R. Think about it that way. With how much work you've actually put in, you're only into the session between 7 and what time did the trade hit? Trade was taken at 8:10, so it's an hour 10 minutes. You're actually doing the work, and TP was hit at so an hour 20, and your session is over. And for me, that was what allowed me to be efficient and effective when I'm trading. I didn't like sitting for hours on end because I can't concentrate for that long. Now, if you want to be more safe, what you can do is wait for the next breaker structure, which I have here, and then you enter off the next buy to sell, which is from here to here. And then alternatively, you can go from the open, go from here, and that'll go again 3.8, and then you can go for a 1 to 3, which again would work. And this is a higher probability trade. Or you can go for the 50%, which is there, and 1 to 5. Now, just remember, if you are going to go for the safer option and wait for that mitigation of the mitigation, this may not happen every single time. This is the one that's most likely to happen. And for me personally, my personal opinion and choice would be entering off here. Because the reason why I'm saying is because you already have the M1 mitigation. Think about it this way, in terms of what I was showing before, in terms of the higher time frame, where you're looking at that 4-hour liquidity grab, then you're looking at that 4-hour mitigation, right? And then you're looking at that continuation there. Okay, and then we'd go on the M1 and then enter off there. We're essentially doing the exact same thing, but on the lower time frame. That's essentially how this model was devised and how it was developed. But it's just a case of having that initiative to think how you can do that. Now, that is essentially the summary of this model. What I will do is I will create another video just so you have more content. I think this will be enough for a starter video to give you a bit of a taste of what's to come. And then I'll give you a breakdown of maybe last week's trades, if there are any. I'll go through GU again. Maybe in the time of when this video is posted and the next one, if you can backtest that last week and then compare it to me, it'll give you a better understanding of the edges as well. I will try my best to keep up to date with doing this, but I've got alternate models that I can show you, and I want to demonstrate to you the effectiveness of each model first, and then it'll be down to you to understand. It'll be down to you to decide, it'll be down to you to decide what is best for you. And the reason why I'm doing this is purely because I understand there's enough content out there, but nothing is compacted together where it give you a straight edge in one video that is clear enough. And I think also, I'm a big advocate of mechanical trading, and it's demonstrated in a very no, it's demonstrated wrong. Essentially, it's not given the limelight that it deserves. I think a simple, repeatable system is. Anyway, it's been a pleasure being back on YouTube, and again, I will try my best to keep up to date. Be sure to like and subscribe. I think that's what most YouTubers say. Apart from that, I will see you all in the next video. Also, if you're looking for funding, actually, I should plug this in now. If you're looking for funding, we do have Vertex funding, up to 2 million in max capital, and it is live capital that you're trading, is investor backed. I'll put a link in the description for our funding page as well. Apart from that, take care, and I'll see you in the next one.